What's up, everyone? So today we are going to do part 2 of helping you become financially free through real estate in 2026. So just as a quick recap, what we talked about previously, there are a couple of key systems or steps really that you need to account for in regards to achieving financial freedom through real estate. And actually, I'll break it down on the whiteboard. And then we talked about a couple of core systems if real estate is going to be that path. Well, what does the process look like to actually do it through real estate? So we talked about the 5 steps last time. So we have, one, financial freedom life, right? This is your vision. This we talked about is the vision. What kind of lifestyle do you actually want to be living? Let's say 5 years from now. In 5 years from now, what kind of life do you want to live? For me, for example, the lifestyle that I chose to live was time, freedom above everything else. I wanted to enjoy a life in which I could do literally whatever I want, not very expensive. I don't need Maseratis or fancy cars or anything like that. I just need the time to be able to spend with my family, be able to work on my health, work out, walk, run, also have the finances needed to travel, eat great foods, really not think about money at all whatsoever, but also understanding I'm not a very materialistic person, nor is my wife. All we care about is enjoying our time. So what does that look like for you? And what will it cost you is step 2, right? What is that financial goal that's linked to that vision, that lifestyle that you want? So we have our vision. This is the first step. Well, let me be honest with you. You can achieve the life that you want even without a clear vision, or you can start making progress to that, but it's much more difficult if you don't have a North Star. This is where people say, I want $100,000 a month of cash flow or whatever. They're not really attaching it to anything. It's what is the vision? What is your why that's going to drive you to work harder than other people? You want goals that are in the top 1% of people. So what's going to drive you to wake up earlier, work harder, be uncomfortable? What is that vision for you? Like I said, for me, family, health, and experiences, I'll say. Great. What does it cost you for that kind of lifestyle? What will it cost you to feel free? If you don't know, you can track it by replicating your expenses currently, right? That's one level of financial freedom, is replicating your current expenses coming in passively. That's financial freedom. You can do it based off your income. Usually, in theory, people have a higher income than their expenses, right? That's how you save. You need income more than expenses. Otherwise, you're getting into debt. Hopefully, that's not you. If it is, we got to clear that piece off. But for the most part, what does that look like? And for me, my goal was, let's replicate X number of expenses. At that time was $7,500 a month. And then it was, let's replicate my income, which at the peak was around $14,000 a month, right? So those were my goals. If I could get that passively coming in, I could live the same lifestyle, but have all of my time available to me to do whatever I want. And actually, I'll say problem solving. That's why I love real estate and helping. The cool thing is, most of this stuff doesn't cost a lot of money. Experiences cost the most amount of money, but I'm not trying to travel every single day to a foreign country, right? It's like a couple of good vacations, enjoy that, go to a restaurant and not think about the amount of money that I'm spending. They're like, don't decide, I'm going to order the chicken over the steak because it's $20 cheaper, right? Like that's the kind of thing for me. Family time, health, none of that stuff really costs a lot of money. Problem solving for me is real estate investing and educating others, plus helping. This was the life that I wanted to live, and I've been able to execute that in around 5 years because of this process. Next step we talked about was financial freedom math, basically. Reverse engineer the amount of money that you need to achieve this goal, right? If you need more clarity on this, we broke it down during the last session, but I also have an entirely free training, tools and resources in my free Wealth Through Real Estate school community. So they got an entire training on how to define your financial freedom, what the timeline could look like, how real estate helps you get there. It's got all of these things in there for you already. It's already for free. You can just leverage all that stuff. So the financial freedom math, right? What's the life that you want to live when you're financially free? What's the math that you would need to get there, right? And I mentioned examples. You can go off your expenses. What expenses do you need to cover through your passive income from your portfolio, right? There's the path of stocks. There's stocks, there's real estate, right? Those are the two main ones. Obviously, you can do things like crypto and all this other stuff, but it's not really a proven guaranteed path, right? There's not a lot of historical, and don't get me wrong, I'm invested in a variety of assets, but the thing that you can have a lot more control of is in regards to your investing journey is investing in stock market and or real estate investing. So expenses. So what are your expenses? And let's just say $7,500 a month. That's how much you want to replicate. There you go. You know your financial freedom math is $7,500 a month. Or let's go based off, let's just say your income, which is, let's say $15K a month. I just need some easy examples to make it like more straightforward to do. So this is how much money you would need to cover the life that you want, at least a rough idea, right? Here's my vision. Here's my why. How much money do I need to cover that lifestyle that I want, right? Then a part of this is breaking down, reverse engineering based on a couple of assumptions. So the next logical step is for the financial freedom math. Let's just assume you are using my similar investment strategy of investing in co-living real estate, the rent by the room strategy. We're going to go with the most conservative cash flow on that. I don't buy any deals that make less than this. So $1,000 a month of cash flow per co-living investment. So if that's the case, if you have $1K per month cash flow, how many properties would you need to be financially free? So let's say, so $15K a month is your goal, we'll say, right? And you get $1K per month per co-living property. Okay. So you would need 15 properties to get you $15K a month, which is when you will be financially free, which is when you'll have enough passive income to cover the vision, the life that you want to be living without having to exchange all your time and energy every single month. Think of the 40 plus hours a week you're putting into your work. Well, imagine just enjoying that time instead, pursuing whatever you actually care about in life. And this is what you'll need to get there. So you have now your vision, right? The life that you'll be living. You know how much it'll cost you. And based on the assumption of $1,000 a month of cash flow per co-living deal, you know that you will need 15 properties to get there. The last piece of this to make it a SMART goal is the timeline. Well, let's say you want to do this in 5 years, for example, because the math will be nice. That means you need to do 15 properties divided by 5 years, 3 properties a year. So now you have a very clear path and what's at the end of that path for you. This is the commitment that I made to myself. And while I was active duty military, was constantly focused on still enjoying my life and all that good stuff, but I knew exactly the lifestyle that I wanted. So I was not surprised that before 30 years old, I achieved those goals and got even more than that because I was clear. This is what I'm working for. I'm working to enjoy the entire rest of my life, to be able to spend as much time as I can with family, focus on my health, experiences, and then just do work that I actually care and enjoy about. People ask me, why do I continue to work? Because I enjoy solving problems. Real estate allows me to solve problems, and helping other people allows me to solve problems. Plus, I have this need, I guess, to help other people, right? You can tell by all the freaking free value and education I try to put out there. I knew what was coming at the end of it if I put in this work. Then I clearly knew, okay, how much money would I need to achieve that? How much cash flow would I need to earn? And then reverse engineering how many properties I need, how long, and how many properties I'd buy per year. So now we're going to clean all this up. We've got the basics. This is kind of a recap of last week. We're going to go into how do you actually get these properties? How do you get real estate to get you there? So now your goal is, we're going to assume that the goal is to live the ideal life that you want, right? But what is the goal for the real estate stuff? So earn 15K per month through purchasing 15 co-living properties in 5 years. The cool part about that is then you can break it down, because 5 years is freaking forever. My goal was, at the time, was 5 properties in 5 years, all small multifamily house hacks. That was my goal, but you have to break down to bite-sized chunks. What am I going to do in this next year? Well, we said that. So you're doing 3 properties per year. We're doing 3 properties per year. You're breaking that into bite-sized chunks, and then you will further break that down into months, or quarters, months, and then the actual actions you need to be consistently doing throughout that month. And that's what we're going to focus on now because we've clearly defined your goal and it's going to be tied to real estate. You can apply this to whatever you want. It's the same process. But you need to understand, usually it starts with the why, the math behind achieving your why, and then breaking it down into the overall goal and then into bite-sized chunks of actual actions you need to be taking over and over and over again. We've got 1 and 2 done. For the most part, you can get more value on that in the last training or in Wealth of Real Estate, whole course around that for free for you guys. Here's your goal. Now we're going to get into, you have to buy 3 properties a year. Some of you are already buying real estate. Some of you are buying real estate, but you cannot buy 3 properties a year because you are running out of money or you don't have the skills to be able to successfully find enough deals or to operate enough properties. Some of you are learning real estate, but haven't actually bought a single property. Some of you have no idea what I'm talking about. Real estate investing in general, you don't even know where to start, right? There's 3 real categories, right? Those who are completely new, those that are learning and need to take action, those that are taking action but cannot scale because they're stuck in bottlenecks. If you are already doing this thing super successfully and you're scaling, well, great. I mean, you don't need me for that. You're already doing it, right? So for the other 3 categories, let's talk about what you need to do. So to acquire real estate properties, you need to have 3 core systems, 3 core buckets that you need to think about. You need deals, you need money, and you need operations. I'm going to break out the full process for you to go from A to Z and show you the respective process steps that fall under each of these, and then the systems that you can do to further benefit each of them, as well as highlight my super investor blueprint, my strategy that allows you to get more cash flow per deal and more wealth building per property, eliminates all of the traditional bottlenecks like running out of money and not having the ability to systematize or operate effectively or not having enough deal flow, all those things. I'll break that down for you. The very beginning is if you want deals, you need to know what kind of deals are you looking for. We've already laid it out for the most part, right? You want, at least what I'm going to teach you is co-living investing. If you don't know what that is or why I recommend it, very simply, you get much more cash flow, much higher cash on cash return, much more wealth building. It's a lot more accessible than any other strategy out there. That's really it's the best financially. There's a lot more of this opportunity out there because we're earlier in this strategy, just like short-term rentals 8 years ago, right? It's more accessible. You have the opportunity to get ahead of the curve compared to everyone else. This is what you're looking for. So let's talk about deals. So for deals, it starts with, first and foremost, is your investment strategy, and break down each of these as their own categories. Then we have your buy box. Then we have lead generation, deal filtering. I'm literally giving you guys every single part of my process. Deal analysis, offers, and then that leads into under contract. Now you have deals that are aligned with your investment strategy, that have been analyzed to ensure that they're achieving the results that you want, and you have them under contract. Once you have deals under contract, your operations and your capital raising, the money piece kicks in. So once it's under contract, and then we'll break each of these down in more detail. Once it's under contract, you have to do due diligence. Due diligence will be broken down shortly, but after diligence, you need to close on the property. You need to project manage it. You need to property manage, and then you need business management. Last, the money, right? The money piece. So we'll call this, right? We said ops. We got this as deals, and then we got green, which is money. You need money to start off. You need earnest money deposit. That's to get deals under contract. You need debt/financing. You need entry costs. And then I'm going to add stuff in brackets for my capital raisers out there. We need capital raising, and then we need deal funding, and then we need investor relations. which is if you got someone else's money in there, you got to have a plan for how you're going to communicate things, how you're going to provide returns, all that other stuff. So these are the three core systems: deals, money, operations. To be a full system, you need to assign who's doing what and get it broken down in more detail. But these are the three core systems, and these are the process of each and every system. We're going to start from the very beginning for deals. Your investment strategy, in my opinion, should be what investment strategy, as quickly and as effectively as possible, gets me my desired results with the least amount of work. Very vague. What is all that corporate speak? What the hell does that mean? That means, how can I buy properties as easily as possible that make me the most amount of money per deal, right? Otherwise, if it's going to take you more work, it's going to take you, well, that's going to take you more work, right? It's less efficient. Or it's going to take you longer. That's not ideal either. Or it's going to earn you less returns. You're going to need more properties. So if you don't have an ideal investment strategy from the beginning, then you're chasing all the wrong things, and you can't build the right buy box unless you have the right investment strategy. You can't generate the right leads unless you have the right buy box based on your investment strategy. So the investment strategy, in my opinion, is fundamental, and that's really the super investor cheat code, is that investment strategy. What is that investment strategy that I love? It's my 3 C's. And each of these are designed to massively optimize your entire real estate investing journey so that you're buying properties that get you more returns with less effort, and there's actually enough deal flow to justify that. All right, so we're buying co-living rentals because we get to buy bigger, better properties in nicer locations that generate us more cash flow and more wealth, and there's a lot of accessibility. There's a lot of deals out there that work for co-living, and there's a lot less competition because less people know about it right now. Same way we bought that Dallas deal where the seller actually paid money to sell it because they were losing money as a long-term rental. They didn't even know or consider that they could operate it as co-living. That same property is generating us over $2,000 a month in cash flow. That's part of the accessibility, is having the right knowledge and information that puts you head and shoulders above other investors right now. You always need some form of competitive advantage. This is one of them, this management strategy of co-living. Next are creative. We focus on creatively financed deals because that means we're buying properties with lower entry costs. We're paying a lower down payment on every investment, which means our returns are higher, but also that money can then go buy more properties. If it costs me half as much money to buy a deal than it would cost you, I can buy twice as many properties as you with that same amount of money. So not only are the returns better, I can leverage that money for more investments to get my goals much more quickly. On top of that, it's not just the down payment that's creatively financed, it's also the interest rates. If my interest rates are lower than if I'm paying 3% interest, you're paying 7%, I can make more deals work. B, I'm going to get much more cash flow. And C, I'm going to pay my debts down faster, right? More is going towards principal, less being wasted on interest because I am buying my properties creatively, right? Because the interest rates are lower. So you get to buy more investments because you're putting less money down, your returns are higher, and you're also you're wasting less on interest, which is further increasing your cash flow and increasing your cash on cash return and allowing you to achieve your goals more quickly. The last piece of that is capital raising. At one point or another, I don't care how much money you have, you are going to run out of your own money before you hit financial freedom. Most people who I talk to, and a lot of people that I talk to, have solid net worth, making solid income. They can maybe buy 1 or 2, maybe in 5 deals using their own money. But the 5 deals won't get you to your $15K a month of cash flow. That'll get you 5 properties, and then what? Are you going to do what every other real estate investor does, or the majority do, which is, okay, well, I will continue earning money at my job, saving $10,000 a year at a time, and then in several years, I'll be able to buy my next one. That is a strategy. If you do that, that's fine. Understand it's a massive bottleneck in your ability to achieve your goals quickly and efficiently. So developing the skill set of raising capital eliminates you not being able to buy great investments because of your lack of money, right? You don't need to do all this stuff. I'm just showing you what the process looks like. Very simply, you just need to have an investment strategy. I'm giving you my super investor investment strategy and the rationale behind it. And then I create a buy box that is very much in alignment with that. most importantly, it needs to be in alignment with my management strategy. So my buy box for co-living is I am looking for properties. First and foremost, it's the location. I want to make sure it's in a location in which co-living makes a lot of logical sense. For example, Pad Split, if you have plenty of trainings on this, you can leverage their map to show you where co-living currently exists, where there is current demand versus supply of co-living rentals, and you can determine which of those markets do you want to own and invest in. I prefer markets that are like medium level, like major cities, but not like California cities or New York or something like that. Somewhere in the middle, those purple cities, the Atlantas, the Charlottes, the various Jacksonville in Florida, Nashville, those types of markets, because I'm getting solid appreciation. My properties are growing in value. The properties are like more quickly. The properties are worth more. So my debts are getting paid down faster, getting more tax benefits, and I'm still getting a ton of cash flow as opposed to trying to buy little rinky-dinky properties in small markets that don't get those wealth benefits, don't get as much wealth benefits, right? So that's a big part of it is location is one, and then property. I'll just put property, but what kind of properties are you looking for? Well, if I'm doing co-living, I want properties that have no less than 6 bedrooms in there by the time it's all said and done. Ideally, I've got 7 or 8 bedrooms, and there's no more than 4 people ever sharing a bathroom. So for me, my buy box, what that looks like is I want properties that are ideally no less than 3 bedroom, 2 bathroom, and 2,000 square feet. Ideally, my preferred is that they're 4 bedroom, 3 bathroom, and 2,000 or more square feet. Because then when I convert the property over, I know I can get it to 8+ bedrooms, maximizing my returns without impacting the quality of life on my tenants that live there. So your buy box is basically simplifying your investment strategy into knowing where you're looking for them, what kind of properties are you looking for, and any other no-goes. No-goes for me in my buy box, I don't want to deal with properties where there are HOAs. I don't want to deal with someone telling me I cannot operate my property the way that I need to because of an HOA. City regulations, ordinances, understood. But an HOA, no, I don't want to deal with that extra work. It's not worth it when there's so many other properties that don't have HOAs. Another thing is I almost exclusively buy creatively financed deals. So if it's not a creatively financed deal, I really don't want to hear about it. At this point, maybe 5% of my properties are non-creative deals, and I'm still making them creative by the time it's all said and done, but it's more work than it's worth to grow and scale. It's just more operations than is necessary. Great. You have your investment strategy. Your buy box should be in alignment with your investment strategy. Lead generation. Where are you going to get investments that fit your buy box? There's 3 real buckets that can fall into. 1, direct. Go on Zillow right now and look at properties and talk to agents and make offers on those deals. You can also directly talk to sellers and try to buy their properties, whether it's cash, creative, whatever. You can directly acquire deals by directly talking to sellers and agents to structure those. That's not my favorite strategy anymore, even though you can get the best deals that way and you can target. It takes a lot of time and effort for this phase, as opposed to me focusing on the real thing that matters, which is, in my opinion, this part is the most important, the deal analysis. It's not about getting a million leads. It's about getting the best deals under contract. So we circumvent that by not wasting too much time and effort on all the direct lead gen. 2, you can do referrals, JV. So you can work with newer investors, other investors, people who might have potential opportunities, but they don't know how to fully structure it. You can work with them and collaborate with them. Or you can train agents instead of directly reaching out to an agent for one deal. You can train an agent, you can train an attorney, you can train people who see opportunities, people that want to sell properties, and get them to refer those deals over to you, and you buy it and they get paid. The difference between direct and referrals is direct is you're pretty much reaching out for one single investment that's listed. The referral is establishing a relationship so they continue sending you more deals that are similar to that one. My favorite, and I include it as part of my creative, I'll call it like leverage deal sourcing, that are wholesalers and bird dogs. Why? Because they're already doing 1 and 2, some way, somehow they got deals that were under contract, and all the wholesaler is doing is bringing it to us for us to filter and analyze, or a bird dog is already filtering it for us and we're just analyzing it. And I prefer that because if you want to scale, right, or even buy a property, if you want to scale though, you need to understand all of this stuff takes time and effort and energy. So you got to pick and choose where is the most important thing for you to dedicate your time and energy. For example, property management takes time and energy. Is it worth you managing and saving a couple $100 a month of cash flow, or outsourcing that? In my opinion, if you want to actually be financially free through real estate, you're going to have 10, 15 properties. You need to dedicate your time and energy to the things that help you grow your portfolio, not all the mini operational things that do cost you money, do cost you cash flow, but don't actually help you grow and scale, if that makes sense. So buying deals from wholesalers and bird dogs, even though there are fees attached to that, is great because they're filtering a lot of the potential non-motivated sellers and allowing me more directly analyze deals and see if they're actually going to help me, as opposed to all the work of just finding a potentially motivated seller. So the deal filtering is essentially someone is generating the leads, whether it's you or them. You are filtering your deal based on your buy box. Just because someone presents you something doesn't mean it's worth your time and effort to do deal analysis. If they bring you a deal that is 2-bedroom, 1-bath in a market you don't want to invest in, don't waste your time or energy. It seems obvious to say that, but the reality is I talk to a lot of people who are spending too much time and energy on all the wrong potential investments. Why? They're analyzing deals that will never even hit their investment buy box or their investment strategy. Why? Because A, they didn't do the fundamental piece. They don't have an investment strategy based on what they're actually looking to accomplish. They don't have a buy box that is based on their investment strategy. So they're wasting a ton of time and energy looking and analyzing deals without having the foundational piece. You need the foundation set so that you actually know, is this a property that I want? Is this a location I want to invest in? Is this going to hit the returns that I want? People spend so much time and energy on this, or even worse, putting deals under contract without the deal analysis, without setting their buy box and their investment strategy first and foremost. That's the reason why I've been able to scale so much more quickly than the majority, because it's based on actual processes. And I don't know if I mentioned this, I'm a chemical engineer by trade. So processes and systems are my thing above everything else, right? That's my thing by trade, is that going through this kind of stuff. But if you saw in reality what mine looks like, this is a simplified version. It gets even crazier because there's a lot of nuance and all that, but this is the overall process to help you guys out. The process and the 3 systems they fall under and why they're all relevant. You can't see the ops, but there's ops there. So have an investment strategy. You don't have to create an investment strategy. Just find one that is in alignment with what you want to do, and make sure it's as scalable to your goals that you want, right? The difference between buying one single property, which is this process, really the process of buying one single property is putting something under contract, closing on it, and then operating it. But one single property, unless it's done well, will not actually push you towards your financial freedom goals, let alone it will not allow you to scale to the actual portfolio size that you need to be financially free, right? Because if every one property is 1K, we need to do this process 15 times to get to 15,000, right? So you need to understand this process to be able to do it over and over again. Understand as you grow and scale your portfolio, there's going to be more and more operational work, especially with this phase, that's not scalable. So you might be able to brute force your way, like I did early on, through this process by doing all of it yourself, but then you will burn out like I did myself as well, and understand that I could not scale to the portfolio size that I needed to have the financial freedom that I wanted, which is why I had to shift my strategy in the way I was getting deals, who was doing what parts of the business. I don't need to do property management. I can outsource that. I don't need to do all the financials. I can outsource that. Understanding all that kind of stuff to allow you to scale. It's very different to talk about buying a single deal, even though this is the process, and being able to build a portfolio to financial freedom, which typically is 10 plus properties. If you're doing, 2 to 5 properties is all you need, you might get away with brute forcing this entire thing. But if you want $10,000 or more of cash flow, you need to understand that you cannot brute force, just do all the dirty work for every single part of this inefficiently to get to that portfolio size that you need to fully be financially free. All right, deal filtering. Hits your buy box goals, right? Location's right, property's right, doesn't hit the no-goes. This is your filtering to then decide what should you analyze. Analyze the deal to say returns. Are the returns there? Cash flow and cash on cash return. If you don't know, I've got full trainings on all of this stuff as well. Deal analysis, but also breaking down what each of these terms are. Cash flow, very simply, is how much money am I going to make each month after all my expenses are paid and I have reserves set aside. Income minus expenses minus reserves is your cash flow. That's what you're left over with. That is this $1,000 a month, right? That's what that is. Your cash on cash return is essentially telling you how hard is your initial investment working for you. Cash on cash return is your annual cash flow. So let's say this 1K, so 12K annual, right? So $12,000 or $1,000 a month divided by your entry cost. How much it took you to acquire the property, get it rent ready, and then the carrying cost for that period as well. That is your cash on cash return. What that means is, like I said, how hard is your money working for you? The higher cash on cash return, the better the deal is. And if you're trying to raise capital, the easier it's going to be to raise capital because the deal is better. But when you split the returns with someone else, they're also getting solid returns, right? So you really need high cash on cash return properties. Everyone wants a benchmark and all that. I'll tell you, the majority of investors that I talk to at traditional type of real estate events, conferences, all that kind of stuff, online forums, they're happy right now with $100 a month of cash flow. They're happy with just barely 1% or 2% of cash on cash return. They just want to be in the game. That's freaking crazy. You're spending time, money, and energy on shitty properties, hoping that it appreciates and you pay down the debt and eventually it cash flows. When in reality, what we're still doing every single freaking day, month over month over month for the last several years, is buying properties, generating us $1,000+ a month of cash flow easily. I gave you the example of the $2,000. We have one that we're looking at right now at $3,000 of cash flow and cash on cash returns of 15% or higher. Very different than what the majority are doing right now. And that's why they are struggling. That's why they are so focused on the federal interest rate getting cut. And now that it's 0.25% lower, maybe deals will work for me. Great. Like, let them be stuck in that. That's where this investment strategy breaks all those bottlenecks. I don't care what the market is doing. I don't care what interest rates are doing. I don't care about tariffs. I don't care about those things. I don't care about even how much money I am earning through a job because I've developed the skill set of raising capital. We are breaking all the bottlenecks that prevent most people from acquiring deals and or scaling their portfolio. Each of this has been designed to break each of the common bottlenecks people have, which is not getting good enough deals, right? Creative and co-living, not being able to scale fast enough, primarily because of traditional debt versus creative financing, and then running out of their own money to buy deals, aka capital raising. All of it is extremely intentional, and I had to basically build this from the ground up when I was starting, so I knew that my path was logical. Yes, I had to improve it over time, but that's how we get here, and that's why I get to give you guys the shortcut for yourselves. Great. For great deals, you make offers, right? You just make an offer on great deals, right? They hit all your returns. You make an offer. Doesn't mean every deal is going to be put under contract. Every great offer is not going to get accepted. Great. You've got a deal under contract that hits your ideal returns and is based on your buy box. Location, property size, all that stuff, it's great. You already know because you have a process. You already know it's going to be exactly what you're looking for and push you towards your financial freedom goals. And it's already been made like a phenomenal deal in general because of the fact that you have the right investment strategy to start off, right? Because your investment strategy could be short-term rentals. It could be long-term. You could buy properties traditionally. You could use your own money, all that stuff. These three are the maximized of the strategy, the debt, and the funding of the deals, right? This is already maximizing management, acquisition / debt, and how you're going to fund these deals. It's already built there. If you want to copy it, go for it. That's why I shared it all. I want you guys to copy and succeed in your real estate investment journey. If you don't want to, that's up to you. This is your personal finance. That's for you to do. Great. Your deal system. The thing is that once you set up your investment strategy and buy box, this is pretty much a one-time thing that you then iterate or you improve or adjust as needed. But you set this right, and then all you're doing over and over again is the lead gen, deal filtering, deal analysis, offers under contract. For every single new deal you want to buy, you're just going through this process over and over again, aka why it's a system. You're just going through this over and over again for every single deal that you want to buy. This is how you get deals on a flywheel coming in over and over again.